Hi, this is PR Sundar. Welcome to Post Market Report sponsored by FII. Today, the global cues were really very good, and in fact, SGX Nifty was indicating about 160 point gap up. But what happened after that was very interesting. The Bank Nifty almost 500 point gap up. Then from there, it fell nearly 550 points down. Then again, it shot up 300 point higher. So the markets were hugely volatile, and especially during the last 4 trading sessions, the markets usually will be very volatile. And because the time decay is very fast, a lot of people get into the options, and markets always move in such a way that it rewards only very minor number of people, not the majority people. So this volatility really helps the market to achieve its goal. And today mainly the Hong Kong market that has recovered. It was up more than 2%. And remember, on Friday it fell into the bear territory. It fell more than 20% from the recent high. So that has increased the optimism among the bulls. But intraday volatility was really very bad. And in fact, yesterday's closing was broken, which I did not expect actually. But then it has recovered more than 120 point in Nifty. Bank Nifty recovered more than 300 points. Coming to the global cues, so until Thursday there is no important news, but Thursday and Friday, so this Jackson Hole Symposium, the Fed may announce some concrete measures. They may indicate the time frame for tapering their bond purchase. So that impact will be seen only the next week. So other than that, the data wise, there is nothing important. Even in US, the sectoral rotation is happening. But coming to the local cues, it is because of few handful of stocks the markets are holding. Otherwise, you look at the mid cap and small cap space, they are really bleeding. And even today, the mid cap index is down by how much? Yeah, so mid cap index is down by 0.7%. Small cap index is down by 2.19%. Even the large caps, look at the auto stocks, they keep falling. And 1 or 2 months before, I remember seeing Hero Motocorp at 3,000. Today it has come to 2,650. So which is more than 10-12%. Same thing goes with all other. In fact, today out of the bottom 5 stocks, Mahindra & Mahindra, Eicher Motor, Bajaj Auto. So 3 out of bottom 5 stocks are auto stocks. The only reason why this series is holding on from 15,800 to 16,500, it is the IT stocks. Yesterday there was a lot of news that Infosys is not able to manage the income tax portal well, and the finance minister calling the CEO. But despite all this bad news, even Infosys traded positive today, and at some point of time TCS shot up more than 2%, and HCL Technology is the star of the day, shooting up nearly 5%. Even on closing basis, it is 4.26% higher. And interestingly, out of the top 5 stocks, 2 stocks are from IT sector. In fact, the top 2 stocks are HCL Technology and TCS. So if you forget about IT stocks and look at sector wise, PSU bank index down, private sector bank index down, realty down, pharma down, metal down, media down, FMCG down, auto down, so everything is down. So it is only those heretic stocks that are holding the markets. So, but at the same time, one question, can we expect some crash? So definitely not. Why not? Because though markets are bleeding in mid cap and small cap, though markets are bleeding in the sector wise, the India VIX, it keeps going down. In fact, in the morning it was higher, but slowly towards the end of the trading session, so the India VIX has come down and it has closed 2.35% down. It closed at 13.68. So we can worry about the market only if the VIX shoots up, at least beyond 20. So until then, the markets may go up, down, but ultimately markets may go up. And of course, in the last 15 months or 16 months, Nifty has traveled from 7,500 to 16,500. And remember, from the journey 7,500 to 16,500 has come without any 10% correction at any point of time. So at any point of time, the Nifty corrected only 7 or 8%. It has not corrected more than 10% from 7,500 to 16,500. So it is always safe to sell options 10% away. So today the FII data is out and they have sold for 1,363 crore. I don't know how we are going to see, whether we have to see this as a positive or negative, and still it is a sell figure of more than 1,000 crore when the global cues are positive. So that is very bad. But at the same time, the last Friday they have sold for more than 2,000 crore. Now they have sold about 1,000 crore less. But at the same time, the positive thing is that the domestic institutions have bought for more than what FIIs have sold. The domestic institutions have bought for 1463, so about 100 crore more than what FIIs have sold. Though in the beginning of this series, the FIIs were bullish, but towards the end, they have taken a bearish view and they started selling aggressively in cash market. So as of today, month to date, so they've sold for about 2,000 crores. But see, month to date, they have sold for more than 2,000 crore, but still markets are 600, 700 points higher than the beginning of the series. So that is how markets function. But the story is different in mid cap and small cap. So coming back to the open interest, so there is a huge amount of calls added at 16,500, 16,600 and 16,700. So though markets may not be bearish, market may not fall much, but market going higher is also very, very difficult. So at every 100 point, so there is going to be a huge selling pressure. So as long as these FIIs are in the sell mode, so we have to take the market as sell on rise rather than buy on dips. So anyway, I am not very bullish. So 16,700, which was hit last week, so that seems to be the ceiling for this current series. So as and when market goes higher, I sell call options above 16,700. However, yesterday I told you there was a huge amount of 16,500 short traders have been written on Friday, and they were very lucky people. Though markets are very hugely volatile, but market going 100 point above 16,500, then going 100 point below 16,500, but again coming back and closing somewhere around 16,500. So those people were rewarded very well. So that's it for now. Hope you enjoyed watching the video. Thank you for watching.